Okay, see here, our new chapter is transfer pricing. This is one of the most important topics in international taxation. Rather, in the whole subject, this is most important topic. See, there are certain chapters from which you can expect confirm question in exam. So this is among those, transfer pricing. Now see, the chapter of transfer pricing, it will not be a small topic as our preceding chapters like advanced ruling, survey, search and seizure. It got over fast, but this will take some decent time. Okay. Now, as usual, first I will show you the summary of the chapter. This is my pattern. By now you understood or not my pattern of teaching? First I give you the overview of the topic, because that is must. Because without having the overview, if you start studying the topic and you realize that where you are going on and on, the topic is not getting over only, you get frustrated. So it is always better to have the overview first. Just as when you travel somewhere, how do you just start the GPS? And once the GPS is on, you come to know that how much time it will take. Within 1 hour you will reach at the destination. You come to know where will be the right turn, left turn. When you know in advance that where you are going, you like it. But without GPS, if you just travel, you keep searching the place, you don't find it. So it is kind of that only. So this is our GPS. This is a roadmap that our chapter will start with introduction and it will end at this point number 13. In all, there are 13 parts of the topic. 13. Okay. So without wasting time, starting with the first thing, introduction. In introduction, I will explain why this chapter is made, what is the purpose of this chapter, and why the topic is called transfer pricing. So all about that will be discussed in introduction. Now see, in introduction, with one example, I will have to explain that multinational companies, they do a particular type of cheating. Introduction started. Multinational companies, they do a particular type of cheating or manipulation in tax. And to control such practices of cheating done by multinational companies, this chapter has taken the birth. The whole purpose of this chapter is to catch the cheating done by multinational companies. So you know now what I need to explain? First I need to explain what kind of cheating they are doing. Because only when you understand the cheating properly and thoroughly, this chapter will make sense. But without making you understand what is this cheating about and directly learning the provisions mechanically, it will all be bouncer. So first my target in this chapter is to make you understand the cheating done by multinational companies. Firstly, what is a multinational company? Even that I don't want to assume that you might be knowing. Multinational company means it is a company who has got its business across the world. The business is not just in India. The business is beyond India. And just by having business beyond India, you cannot be called multinational. See, I can also have my business in India, Dubai, Singapore, my coaching class. But I will be called multinational when in different countries I have a separate entity. Multinational companies, it is companies. So tell me if you understood, if I am having my coaching class and my coaching class has got various branches across the world, thousands of branches, but entity is only one, Shirish Vyas. So when there is only one entity, it cannot be called as multi. Multi means multiple entities in multiple nations. So see, in my example of coaching class, although I have my coaching class across the world, I have got 1,000 branches, but all are branches. From entity point of view, I am only one entity. Either I can be a sole trader, Mr. Shirish Vyas, or Shirish Vyas Limited, a company. So if I am having only one entity, then just by having business across the world, I cannot be called MNC. To call someone as MNC, the business is across the world, plus there should be multiple entities. So this you might have noticed in big brands like Sony, L'Oreal, Samsung. Like Samsung is originally a company from Korea. But in India, when you see Samsung, it's a separate entity. Samsung India Limited by a different name. The brand sounds to be a single brand, Samsung. But in reality, those who know the internal details, they know that Samsung might have got, say, 50 companies, 30 companies, separately formed entity. Then you are called a multinational company. So this was what is a multinational company, and the chapter is about them only. So that's why you need to understand properly what is multinational. Okay. Now, next I will explain what cheating, what manipulation these multinational companies do. For that, I have taken one example ready. With this example, you will easily understand the cheating. And then I will make you explain to control such cheating what measures law has taken by way of various sections in the law. See, all these sections are nothing but measures to control such practices, such malified wrong practices or manipulative cheating tendencies of multinational companies. To control such practice, there are many sections. So let us understand the cheating. Now, let us assume X Limited is a company in India. Only focus on that part which I am highlighting, okay? So focus on this. X Limited is a company in India. Now X Limited wants to sell its goods in foreign country. X Limited wants to sell its goods in foreign country. Everyone likes to do that. See, initially when you start the business new, you are locally focused. You want to sell the goods in local area only. But once your business expands, you feel like selling a product in foreign country also. So imagine X Limited wanted to sell its goods in foreign country. But you know what it did? Instead of selling the goods to the foreign customer directly, instead of selling the goods to the foreign customer directly, you know what it did? It formed a separate entity Y Limited in foreign country. It formed a separate entity in the name of Y Limited. So see, Y Limited looks like a different entity, but it is a company formed by X Limited only. It is from the family of X Limited only. So you know what Y X Limited did? It started a new company in the name of Y Limited, and now what X Limited will do, it will first sell goods to Y Limited, and then Y Limited will further sell to the foreign customers. Instead of selling the goods directly to the foreign customers, it is selling the goods via. What is via? Via means first it will sell to Y Limited, and then tell me what are these arrows? Yes, Y Limited is selling to the foreign customers, and customers are in lakhs. So whatever, Y Limited will sell to the ultimate customer. So here you need to first think that why? What is the reason that X Limited is not selling the goods directly to the foreign customers? Our target is to sell the goods to customers, and usually a layman would directly deal with the customers. But instead of selling the goods directly to the foreign customers, what X Limited is doing? It is selling the goods first to Y Limited. Y Limited, Y Limited is its own company only. Y Limited is its own company, but a separately incorporated company in foreign country. So it will first sell to Y, then Y will sell to the ultimate customers. So why like this? First I want you to think the reason that why X Limited is doing the sale via. Usually see, if I also want to sell my product in foreign country, what will I do? I will sell my goods directly to the foreign customers. At the most, I'll open a branch over there or a shop. And branch and shop is not a separate entity. It is an extension of my business only. Means usually what a layman does, if I want to sell my products in Singapore, so what I should do? I will directly communicate with my Singaporean customers. I will directly sell to them. Or if there are so many customers, I will keep a branch over there. But branch is not a separate entity, right? Branch is my extension only. So this is what I do. Means in short, I will directly deal with the customers. But here what I am doing, I have opened a separate entity like Y Limited in a foreign country, and then first I will sell to Y Limited, and then Y will sell to the ultimate customer. So what was the reason of opening altogether a separate entity? Did you notice it is Y Limited? And when you see the word LTD, that is a sign of it's altogether a separate entity. So tell me, what is going on in the mind of X Limited? Something is fishy. That when you can sell the goods directly to the foreign customer, why are you not selling the good directly to the foreign customer? And why this indirect route? Indirect route. Why? Correct. Perfectly right. Usually when I start this explanation, most of the students are able to answer this. But in case someone could not make out the answer, listen to my explanation carefully. See, if X Limited sells the good directly to the foreign customers, it cannot manipulate the sale price. The transaction is a sale, don't forget. It's a sale from India. And Indian people selling goods, it is making their income. Okay. And on income only there is tax. So to pay less tax, I want to manipulate the sale price, that I can show the sale price as very small. Because smaller the sale price, my income and profits will look small and I will have to pay less tax. So the problem is what, if X Limited sells the goods directly to foreign customer, it cannot manipulate the sale price. They will have to show the price as it is. Whatever is the genuine sale price, they will have to transact at that price only. Tell me, why did I say it is not possible to manipulate when you directly deal with the customers? You can take our example also. In my business, my customers are students. So tell me, if I have got 1,000 students, is it possible for me to manipulate with each student? Means, can I tell my student, see dear student, my fees of direct tax is 15,000, but do one thing, you give me in check only 7,000, balance you give me in cash. If with each and every student, if I do like this, students will think that what this sir is doing. In order to reduce his tax liability, he is doing all this thing. See, one or two student might agree, exceptionally. Okay sir, I'll cooperate. Okay sir, I'll cooperate. But in general, when the students are at large, I cannot expect that students will understand my feelings. That if you give me only this much amount in check and balance which you give me in cash, I can save my tax. Can I expect to do this with each and every student? Not possible. What students will say? What the hell are you doing? You are teaching. I want to pay my fees in check only. Why should I pay in cash? Just because you want to save your tax, you are doing all this thing. Means my impression will be spoiled. So that's why what I was trying to say is, when you are dealing with the customers, you cannot manipulate. In your case also, I always told you, the way you want, you pay the fees. If you are giving me in check, give me in check. GPay, give me GPay. I will have to accept, because I cannot expect that each and every student, especially when customers are in large quantity, I cannot manipulate with them. So that's why, what X Limited felt, don't lose the link. X Limited felt that if I sell directly to foreign customer, and assume there are 1 lakh customers in foreign country. So with each and every customer, how will I manipulate? And if I can't manipulate, I will have to show full sale price in my books of accounts. And full sale price means full profit, more tax. That's what X Limited do not want. It doesn't want to pay tax. So you know what trick, what idea it has played? Tell me, what is the idea? It has formed a separate entity which is in the eyes of law a separate company, but in fact it is from the family of X Limited only. Maybe Y Limited looks like a separate company, but majority of the shares are held by X Limited. So in short, it is the company formed by X Limited only. So now you know why the cheating will work now. Now tell me how the cheating will work. Now X Limited does not have to deal with foreign customer. It has to sell all the goods to Y Limited. And when X Limited has to deal with Y Limited, it can always manipulate the sale price. Means the product which has a genuine sale price of say $6,000. Wait, let me show here. Wait. The product which has a genuine sale price of $6,000, you know what X Limited has done? See what it has done. The product which has a genuine sale price of $6,000, it will sell to Y Limited at only 4,000. Feel it is less. And why it is possible to show only small sale price? Because it is between X and Y only. And between X and Y, what is less, what is more, everything is ours only. What did I say? Between X and Y, what less, what more, what mine, what yours, it is ours only. See, when I am dealing with outsider, I feel, give my money, it is my money, it is not your money. It becomes like it's yours, it's mine, because we are different persons. But Y Limited, although in the eyes of law looks like a separate person, but we know it is from our family only. So even if we show less sale price, actually we are not going to get less income. Because from Y, what you will earn, it is your own company only. So when you are dealing with Y Limited, which is your own company only, you can sell the goods at a lower price, as low as possible. In fact, it can sell the goods at $40 also. The product which has a genuine sale price of $6,000, it can even sell at $40. So you know what X Limited is trying to do? By making the sale price smaller and smaller, it wants to reduce the profit. And by reducing the profit, it wants to reduce the tax liability. But you know, what is the repercussion of this? Repercussion means the side effect. That when you reduce the selling price so low, there is some side effect of that. What side effect? The repercussion I am trying to say. For X Limited, this is a sale. Complete my sentence. For X Limited, it is a sale. For X Limited, it is an income transaction. But for Y Limited, this sale is a purchase. And for Y Limited, purchases is an expenditure. So imagine, activate your brain. If in the transaction the sale price is reduced, so a lower sale price will be a lower purchase cost for Y Limited. Try to think from Y's point of view. So if we reduce the sale price as less as possible, so the side effect is what you know, that lower sale price will amount to a lower cost for Y Limited. So what? So when Y Limited will have to show a low cost, its profit will increase. And Y Limited's profit will increase means its tax will increase. So in short, my doubt is what you know. So what was the advantage of the cheating? X Limited, by reducing the sale price, it could reduce the profit. But when X Limited's profit reduce, Y Limited's profit will increase. Did you understand why Y Limited's profit will increase? Because if something is income for me, for other party it is an expenditure. If I try to, look at me properly, if I try to show small income, that smaller income is income for me. But for you it is an expenditure. And if you have to show small expense, your profit will rise and your tax will increase. Now, if you say, why are you worried about that? That is Y Limited's problem. No, Y Limited is my bacha. It is my baby. It is my own company. So if Y Limited's tax is affected, it will concern me. Me means who? X Limited. So see what I am trying to say, by reducing the sale price, X Limited can successfully reduce the profit. But on the other hand, Y Limited's profit will increase. So what is the advantage? On one hand, X's profit is reducing. On the other hand, Y's profit is increasing. The net effect is no effect. So what advantage they are getting? Yes, now you have to notice this thing. A smart student might have already noticed this thing what I have written. I am showing you right now, but it has already been written on the screen. So in my example, assume in India the regular tax rate is 30%. General tax rate I am talking about. Don't start thinking slab rates, this and that. In general, the rate of tax for corporates especially it is 30%. Now assume in my example that the foreign country which is there in my example, in that country the tax rate is 10% only. And you know there are many foreign countries where the tax rates are very low. In some countries the tax is zero. Zero tax countries are also there because the world is big. So assume in my example this foreign country the tax rate is only 10%. Here comes the advantage. Now tell me, what was the advantage of manipulating the sale price? Now you can calculate the advantage. Calculate and tell me the advantage. See, X Limited, by showing a lower sale price, it can reduce its profit by $2,000. X Limited is able to reduce profit by, why did I say $2,000? Genuine sale price is 6,000. Ideally, if X Limited would have transacted with a normal person, it would have sold for 6,000. But since Y Limited, it is its own company, so instead of 6,000, it could sell at 4,000. So there is a reduction of $2,000. So by manipulating, X Limited could reduce profits by $2,000, and on $2,000 they could save 30% taxes on profits. Okay, but same $2,000 will increase in the profit of Y. See, for my satisfaction, tell me, did you really understand why Y Limited's profit will increase? I said because if something is income for me, it is expenditure for you. And if I try to show chota income, small income, that small income will become a small expense for you. And when you have to show small expense, your profit will rise and your tax will rise. So if my profit reduces by $2,000, if my profit, my means I am X, reduces by $2,000, obviously Y Limited's profit will increase by $2,000. But in Y Limited's country, the tax is only 10%. So in short, what we can say, X can reduce the tax by 30%, but Y's tax will increase only by 10%. So there is a difference of 20% where X Limited is getting the advantage. This is the cheating adopted by X Limited. And you know why they become a multinational company? As I said, in multinational company, your business is not just across the world. You have got multiple entities also. And I could show here multiple entities. Can you see X Limited is one brand only. But it has got two entities, multiple entities. One entity is as X Limited in India. Another entity is Y Limited. Although in the ISO law they are different entities, but it is the same family. Okay. See, that's why what I have written here, look at this. Associated enterprises. Can you see the alphabet AE? AE is a popular short form of associated enterprise. Enterprise means entities carry on business. Associated means they are connected, they are related, they are from the same family. You didn't see this AE, associated enterprise. So that's what I have been repeatedly saying, that Y Limited is from our own family, means it is associated to us, it is related, it is our part only. So in short, the cheating, I have explained the cheating part. What cheating part? That X Limited can reduce the profit and save 30% tax. But on the other hand, Y Limited's profit will increase, but we are not bothered. Why not bothered? Because if profit increases also, if its tax increases also, but it will increase by 10%. And that 10% tax, whether you pay in foreign country, wherever, but you have to pay additionally 10%. But in India, you can save 30%. So there is an advantage of 20%. So this is the common practice adopted by all the multinational company. So this is a good idea. Even if I want, what I can do, tell me if I want to sell my goods in Dubai, in Singapore, or in some foreign country, advise me based on this cheating, what I should do. I will not directly sell to the customers in Dubai. What I will do, I will open a separate company by a different name. This is Shirish Vyas Limited, that is ABC Limited. But I know it is my company only because I have incorporated that company in foreign country. So first what I should do, advise me based on cheating. First I will open a separate company in foreign country. Then what I will do, now I will have to not deal with the foreign customers. Now all the products which I make in India, I will sell to that separately formed company, ABC Limited, whatever in foreign country, and then I will sell at a very lower price, so that from India sales looks very small, because I am selling my whole consignment to only one entity, and that entity is formed by me only, and since it is my entity, I will sell at the lowest price, so that in India it looks like the sale is so low, the profits are so low, and I can reduce my profit and reduce my tax by 30% in India. And I am repeating because this example is very important, base of the chapter. Okay, this is a blood and lifeline of the topic. So I can reduce my profit and reduce my tax, but now I am worried about what? The entity which I formed in foreign country, it will suffer tax. Why? Because if I try to show chota sale price, small sale price, that same sale is a purchase for my entity in foreign country, and if it has to show small purchase, its profits will rise, its tax will increase, but that entity is not worried because it is a blessed entity in foreign country. Many countries the tax rates are low, so my tax will reduce by 30%, but my other entity's tax will increase only by say 10% in my example. So I gain an advantage. But this wouldn't have been possible had I sold directly to the foreign customers. Because dealing directly with foreign customers, it is not just that I have one customer. In Dubai, where I want to sell my goods, I might have lakhs of customers. Imagine I am a big businessman. So with lakhs of customers, how will I manipulate? Then to I will have to sell the product at the genuine sale price of 6,000. And if I have to show everything at $6,000 at a genuine sale price, then I will have to report full sales in my accounts. And that will show big profit and that will increase my tax. So this is the common practice. See, unless you understand the practices adopted by MNCs, you cannot go ahead in this chapter. So did you understand what is a, and this is very common. That is why every big brand you will notice, when they enter a different country, they have a separate entity there. Just as what idea I gave, if I want to enter Dubai market, what I will do, I will open a separate entity there. So that whenever I want to sell, I will sell to my entity at a manipulated price. So this is what is the culture in the world. Take any big brand, L'Oreal France. L'Oreal France is a company in France. The parent company is in France. But in India, they have a separate entity, L'Oreal India Limited. Means that France, L'Oreal do not sell directly to Indian customer directly. They also sell via. They will sell the consignment to L'Oreal India Limited, and then L'Oreal India will sell in Indian customer. Means what Indians do, even foreigners do the same thing. See what Indians do, we open a separate company in foreign and then we sell via. Same practice is adopted by foreigners also. Even foreign brands like Sony from Japan, Samsung from Korea, even they adopt the same practice. If they want to sell goods in Indian market, what they do? They don't sell directly to Indian customers. What they do? They will form a separate entity here and then they will sell the whole lot to that entity at a manipulated price so that they can show less sales. Means this is not a practice adopted by Indians. It's an international practice. That is what the chapter is from, international taxation. It is not that we people are doing this thing. Even foreign entities are doing. I gave many examples. L'Oreal France, Sony Japan, Samsung Korea, LG Korea. What they do? They have also opened a separate entity in India. They don't sell goods directly to the Indian customers. They also have a separate entity and from their country they sell to India at a manipulated price. But see, for this they have to make the planning in such a way that they have to see the rate of tax also. Because see, only if the advantage of tax rate is there, it makes sense. So tell me, had it been like this, in foreign also the tax rate is 30%. So is there any point in doing the cheating? No point. Why? Because see, imagine in foreign country also the rate of tax would have been 30%. Then there is no point in cheating, because if X Limited reduces the profit, reduces the tax, its tax will reduce by 30%. But on the other hand, Y Limited's tax will increase, because income for me is expenditure for Y. So it will have opposite effect. So my tax reduces by 30, but my brother means Y Limited, his tax will increase. So the net effect is same. Then we don't do such cheating. Means they keep in mind the tax rates also. That will give them advantage. You know, this cheating what I was explaining, this cheating works only if you have a separate entity. Okay, let us explore like this. If X Limited wouldn't have formed a separate entity Y Limited, it would have kept a branch over there, branch. So branch can never take a form of a separate entity. You know, when it is a branch in foreign, the entity is X Limited only. See, if I have say 100 branches, I will file only one return. But if I form 10 companies, I will file 10 returns. Importance of company I am saying. So tell me, what if instead of Y Limited, X Limited had a branch? Then you know, this transaction cannot become a different transaction, because then it will amount to goods sent to branch. Have you done some branch accounts also? So if there is a branch, then what X Limited will say? It is goods sent to branch. It's not even a sale. Actual sale will be this sale, and all this sale will get the name of X Limited. It is sale done by X Limited. And anyways, I said these sales cannot be manipulated. These are sales to the ultimate customer. And all these sales will be called in the name of X Limited. Means X Limited cannot put its hands up. This is not my sale. It is a sale of branch. A branch means what? It is you only. See, when you do through a separate entity, you know what X Limited can do? See here. X can say, these are not my sales. Means X Limited can simply raise the hand and say, these are not my sales. That is sale of Y Limited. Because Y is a separate entity. And so you know, this sale is actually at a genuine price. Because this is to customers in foreign. So when it is a separate entity, you can always detach yourself. You can always detach your sale from this sale. Detached means what? You can say this is not mine. That is sale by Y Limited. Y Limited is separate entity, talk to Y Limited. Yes, my sale is this only. I am responsible for this. And X Limited knows that it has manipulated at sale price. So in short, what I am trying to say, that if you open a branch, the cheating doesn't work. Because branch is not a separate entity only. This you have realized or not? If I have a branch in foreign country, it will be treated as extension of Indian business. It is treated, my entity will only be one. But if it is a separate entity, then I am different, that is different. Although I know internally that we are all same, but it becomes a separate entity. And only when separate entity is there, cheating can work. Because then you can have a separation. Separation between this sale and this sale. And when there is a separation, I will be responsible only on this sale, which I can easily manipulate. But that separation is not possible if there is a branch. Because if there is a branch, it is just treated as one single sale. And every sale will come in the name of X Limited. And that sale to ultimate customer is at full price. Manipulation doesn't work. Okay, now see. Anyways, I just wanted to share, because some students keep thinking, what if it was a branch? It cannot be a branch. It has to be a separate entity. Let it be a company or a partnership firm. LLP. Let it be any entity, but a separate entity which is legally recognized by the law as separate. Then only the cheating will work. Okay, tell me, come on. This cheating has a proper term. You know, this cheating is called what? Base erosion profit shifting. The cheating which I explained, what cheating? Where the genuine sale price, although it is 6,000, we transacted at only 4,000. We manipulated a sale price so that our profits reduce and our tax reduce, and on the other hand, we are not bothered about Y Limited because its tax will increase hardly by 10%. The cheating, which I repeated again, is known as base erosion profit shifting. Now, I want you to feel why it is called base erosion profit shifting. You know, this term is so important for CA final. Many times you will come across this base erosion profit shifting. It is commonly called as what, BEPS. I don't know what kind of articleship you are doing, but a student who has done articleship in transfer pricing department, he is familiar with the term BEPS. BEPS is a short form of base erosion profit shifting. So can you tell me why this cheating is called base erosion profit shifting? Try to feel why it is called base erosion profit shifting. What is the base? What erosion? What profit and what shifting? Partly correct. You are partly correct. See here. Here, best ways to feel what? Don't focus on base erosion. Focus on profit shifting. This is necessary for you to feel why the profit is shifting. Did you feel shifting of profit? How? Firstly, don't pay attention on the word base erosion. I will explain what is base erosion. First, focus on profit shifting. Profit shifting. Which profit is shifted? Profit of $2,000 in my example. See, by reporting the sales at just 4,000 instead of a genuine figure of 6,000, I am reducing my profit by 2,000. So that $2,000 is profit in my example, right? And that profit is shifted. Why did I say it shifted? Because when I show lower sale, my profits will be lower, but Y Limited's profit will be higher. But Y Limited, how did it get higher profit? It got shifted from India only. See, obviously shifting happens. If I show low profits, my lower profit will become higher profit for you. So profit gets shifted from me to you. So tell me how the profit has traveled, how it has shifted from X Limited, the profit which belonged to, why did I say profit which belonged to X Limited? X Limited only in the first place should have shown 6,000. But instead of 6,000, if they show 4,000, so they are reducing the profit of 2,000. But actually it belongs to X Limited. Please imagine if X Limited wouldn't have done this cheating, it would have reported a sales of 6,000 and the profit would have been accounted in X Limited. But by reporting a lower sale, they have reduced the profit, but that profit got shifted to Y Limited. And you know why law feels bad about this? Why Indian government feels hurt? That the profit which belongs to India is shifted to foreign country. And the profit on which India should have got the tax is earned by foreign country. This is unacceptable. We cannot accept the profit which has the base in India. The profit of $2,000 which has a base in India, that base has been eroded. Eroded means destroyed. Tell me, why did I say the profit which has a base in India? Why I am calling it the profit at a base in India? Because the goods which are being sold were manufactured in India. It is India's production. See, it's a sale, but when X Limited would sell, when it will produce, so X Limited might be producing goods in India. So if the goods itself are produced in India, the profits are generated in India. It has a base in India. But that base of the profit is eroded. And after erosion means destroyed. And that is shifted to foreign country. So that's what Indian government is feeling bad about. Hence this cheating is called as base erosion, profit shifting. This law cannot tolerate. You know, even if this tax rate would have been say 30%. Just imagine the tax rate in foreign country would have been 30%. Still Indian government will not tolerate. Patience, patience. What did I say? Instead of 10%, even if the tax would have been 30%. So in that 30% example, what did I say? Assessee will not get advantage. Why he will not get advantage? Why X Limited won't get advantage if this is 30%? Because by manipulating the sale price, if it reduces the tax by 30, Y Limited's tax will increase by 30. So on one hand, tax is reducing for X Limited. But on the other hand, my brother Y Limited, his tax is increasing by 30. So net effect is same. So assessee is not getting advantage. But government is still hurt. Government is still hurt. Why? Because the profit which belongs to India, ultimately it is shifted. And the profit on which India should have got tax, foreign countries getting. So even that will not be tolerated. So indirectly, you know what message has been conveyed? Irrespective of the tax rate. See, initially I had to take example of 10% so that students enjoy. Hey, what a cheating. What kind of cheating they have done. Only when I give some attraction, advantage, you feel this is a cheating. But see, now open up your mind. What law says? To hell with the rate of tax. Even if this tax rate is 30%, assessee might not have got advantage, right? But government is still hurt. Did you understand why government is still hurt? Because when you manipulate the sale price and you make it short, from 6,000 to 4,000, you are reducing the profits in India. And that means on that profit, Indian government is not able to get the tax. And the same profit is being shifted to foreign country in the books of Y Limited, on which foreign country is getting the tax. X and Y were not affected because overall in terms of money, X's money was saved by 30, Y's money increased by 30, net effect is same. But for them it's same. But Indian government, they have suffered a loss. The tax which should have come to India has gone to foreign country. So this cheating is called base erosion, profit shifting. For this, a whole chapter is launched. There are many sections starting from 90 to A till here. These many sections, every section is targeting on what? How to control such practices, how to control such practices, how to punish the assessee for such practices. The entire chapter is revolving. This example I could have taken short and rushed also, but it will spoil the whole chapter. That's why I didn't mind repeating twice, thrice, some points again and again, because this is the base of the chapter. Till end of the chapter, this example will remain intact. With the help of this example only, I will explain many provisions. So if this example is literally by heart, it will be good for you for this chapter. Okay, now see here. What is the solution for this cheating? Till now, I was explaining the practices adopted by MNCs, what cheating they do, and how government is hurt. Government is hurt because of base erosion, profit shifting. What should be the sentence? The profit of $2,000 which at the base, the profit of $2,000 in my example, which at the base in India, that base is eroded and it is being shifted to other country, and the profit on which India should have got the tax is enjoyed by foreign country. So that is bad, and people staying in India are doing such thing. This is what they care for India. The money which should go to India, they are just shifting to foreign country. This is bad. Now what is the solution for this? See, till now I have been repeatedly explaining what cheating they are doing, why government is hurt, blah blah blah. What is the solution? Tell me as a layman. If this is the cheating which is going on globally, it is not just going on in India. It is not that only Indians are doing this. Even foreigners do. This is a practice very common at world level. So what should be the solution for this? Try with common sense. The solution would be, whatever sale price X Limited is declaring, don't accept it. Because the fact that it is a manipulated price, the solution is what? Don't accept the price declared by X Limited in its sale. Just ignore it. And you should rely upon the genuine sale price, which is called as arm's length price. Arm's length price is nothing but the genuine sale price, which in my example is $6,000. I am giving you the solution that because this cheating is going on globally, what is the solution left with the government? The solution is, don't rely on the price. Because the entire cheating was what? They manipulated the sale price, right? So if the sale price is manipulated, don't accept it. Let assessee show $40. Here it has shown 4,000, right? Let him show $1,000, $500. You know what law says? To hell with you and to hell with your price. You show whatever you want. We will disregard. We will disregard your sale price. And we will depend upon the true, fair and the genuine price, which is $6,000 and which is called arm's length price. And you know what government will do now? It will compare this genuine with 4,000. So what is the difference? What is the difference? Difference is of $2,000. So whatever shortfall has appeared in the books of X Limited will be added in the income of X Limited. In short, the cheating will not work now. Whatever you wanted to reduce the profits by $2,000, reduce it. Ultimately, government is not going to accept the reduced profit. Whatever was the shortfall between 6,000 and 4,000, that difference of $2,000 will be added in the income of X Limited. So ultimately, X Limited is brought back to 6,000. So in short, now the cheating doesn't work. So many students say, sir, then you were explaining some cheating and we thought we have got some good idea. Dear student, this was the idea which was a good idea long back. I was explaining the past history. Now since the law of transfer pricing has come, this cheating will not work. It will not work, because however low you show, however low sale price you show, the law will add back to your income to bring it to the arm's length price. Means your cheating will not work. But right now you feel the cheating will not work. But once you go into the depth of the chapter, you will find some loopholes. You will find some ideas of still doing the cheating. Because see, still there are bad people on this earth. Whatever rule law makes, a person if he is bad, he can find, his mind is so crooked, he will find 10 different techniques. But right now it sounds that looking at the rule, the cheating will not work. But an expert of transfer pricing, he will find some way or the other to still cheat the government. Anyways, that is an advanced level. Once you become expert of transfer pricing, means when you know everything about transfer pricing. But anyways, that is advanced. Right now what you should feel, oh my god, this cheating will not work now. So it will not work. Because if it is left to work, India will suffer a base erosion, profit shifting, which is bad for the country. And you know, these multinational companies I am talking about, their transactions are in crores. And it is just not just one entity. There are many multinational companies in India. If everyone does this manipulation, Indian government suffers huge loss because of base erosion, profit shifting. But anyways, now government is least bothered. Because whatever low price you show, it will anyways not be accepted. The difference will be added to your income. But wait, when I said this thing, how can you just reject this price? It can be genuine also. So for this, you know what law has said? If we come to know that the two parties are associated, we will not believe your price. Means to doubt your price of 4,000, there is a condition that government should be able to say that, oh, you both are associated. You both X and Y are associated. Once it is established that you are an, then only you will be blamed for the cheating. So vice versa. Think opposite. If I can prove that me and Y are not associated, they will have to accept this price. In short, I am taking to the next level that the blame of cheating will come on us when we are transacting with an associated enterprise. Now what is associated enterprise? We will learn soon. Till now I am just casually explain why is from our family, we are related, we are same, brother, sister, whatever I am saying. But actually there is a proper definition of associated enterprise. Tell me why that definition is important. Because only if it is proved that X and Y are associated, then only law can confidently reject your price and take the genuine price as a base, which is called arm's length price. But if assessee is able to prove, Baba, me and Y, we are no way associated, then to even if you show less than 4,000, they will have to accept. One more thing. There should be a transaction between associated enterprise. That is one thing. Second thing is, it should be a transaction of international level. The transaction between transaction between X and Y, firstly it should be a transaction between two associated enterprise. There is one more condition to blame the assessee, that it should be an international level of transaction. Means one in India, one in foreign. Tell me why it should be an international transaction. Why? Because only if there is an international transaction, we can see the profit shifting from one country to another country. And the topic is mainly about what? To slap the profit shifting. And that profit shifting can be seen when? When it is international transaction. Okay, think reverse, think vice versa. What if X and Y both are in India? Tell me, what if X and Y both are in India? If they internally manipulate, still they might be doing cheating. but then it is not profit shifting wala cheating. Because then if X and Y both are in India, what I should say? Profit shifting or profit remaining in India? Why remaining? Because if X's profit will reduce and Y's profit will increase, and when both are in India, the profit is not shifting. The threat of profit shifting is there when there is an international transaction. You know why I'm stressing and excited for this? Because this is the main condition of the chapter. Look at this. Can you guess what I've written? Whenever the two entities are associated enterprise, and if it is an international transaction, then you are finished. Then your price will be rejected outright. In short, see, there should be some conditions to blame the assessee, because law cannot blame everyone just because they feel something is fishy. When law can confidently blame that you are confirm a cheater, only when these two conditions are proved. Which two conditions? Firstly, between X and Y there has to be some association. What is that association? I have yet to explain. I will explain. But the first condition is there must be an association between X and Y. And second condition is it should be an international transaction where there are chances that profit will shift from one country to another country. If these two conditions are satisfied, then what? Then what? Complete my sentence. If these two conditions are satisfied, then the price declared by the assessee will be rejected and government will rely on arm's length price, which is nothing but the genuine sale price. See, here I have written equals to. Doesn't it? It literally doesn't mean equals to. It is not a mathematical equation where you are trying to say this plus this is equal to this. It is not in terms of mathematical equation. Understand my feeling. What I am trying to say, if this combination is seen, we will calculate arm's length price. So is equal to doesn't literally mean that if you add these two things, it is not a maths. This equation is a condition, that if condition 1 and condition 2, can you see? If these two conditions are fulfilled, means if you feel this combination, then government blood will start boiling. Why it will start boiling? Because they can see association. When there is an association, definitely something is fishy, and especially it's an international transaction. Means in that fishy activity, profit is getting shifted. Once the law sees the combination of AE plus IT, blood will start boiling. And in that boiling state, what they will do? They will simply reject your price and they will calculate the arm's length price. Tell me why it is called arm's length price? Why is arms? See, arms means people of same level. And see, usually what happens, if I am dealing with someone who is of my same level, the price will be genuine. You will not understand in this sentence only. Listen to my next sentence. But I will repeat this sentence again. When you are dealing with a person of same level, the price is genuine. But if I am dealing with a person who is below me, whom I can control, so whom I can control means I can manipulate the price. So below me means Y limited is below me. Y cannot be above me. To Y, what will I say? Dear Y limited, I have formed you. You are my bacha. You are born by me only. It is me, X limited, who created you. So when I can tell Y limited, it is me who has created you. That means Y is of my same level, K, it is under me. It is under me, and someone who is under me, that entity comes in my control, and if I can control the entity, I can manipulate the price. But if some other entity is an independent entity, it has its own identity, it has its own existence, it has its own independence, then it becomes difficult to control that. Can I control JK Shah classes? Do this, do that? Because they are my equal competitor. I am Prime Vision, they are JK Shah. Or for that matter, any other coaching class. So, because they are independent. See, if I form my own company only, Prime Vision CA section, Prime Vision college section, then I can control that entity. It is my entity only. But if I am talking about Prime Vision and some other competitor of mine, JK Shah, I cannot control them. And when I cannot control them, I cannot manipulate the price between us. So that is why it is said that when you are dealing with a person of same level, means Prime Vision and JK Shah dealing, then the price will be trustworthy. Because neither Prime Vision can control JK Shah classes, nor JK Shah can control Prime Vision. We both are independent, we are at same level. Level in not terms of turnover. My turnover might be little less. Not in terms of turnover, in terms of my independence. I have my own identity, they have their own identity. So we are called at same level, and when person of same level means arm's length deal, the price is trustworthy. That's why it is said that genuine price is arm's length price. But on the other hand, if I have my own entity, Prime Vision CA classes, Prime Vision college level classes, imagine two companies. Then when Prime Vision CA classes is dealing with Prime Vision college classes, then it is a trustworthy transaction or shock-worthy. Shock means doubt. Then it will be a shock-worthy transaction. Shock-worthy means there will be a shock, there will be a doubt. That definitely something is fishy, because Prime Vision CA section and Prime Vision college section, although they are separate entity, but that college section Prime Vision is controlled by Prime Vision CA section. So when you can control the entity, that means the entity is not at par with you, it is under you. And when someone is under you, you can control and manipulate. In short, I wanted to make you feel why the word arm's length. Because I have seen students simply, yes, it is arm's length. But why, what arm and what length? So arm's length means it is of same level. So best example is if Prime Vision deals with JK Shah classes, they are of same level. So neither I can regulate and control them, nor they can do. So if there is a transaction between me and JK Shah classes, the price can be trusted. Conclusion, tell me, when government will not trust your price, what are the two conditions? If the two parties of the transactions are associated enterprise, this is condition 1, and it should be international. See, I am not saying that if it is a domestic transaction, there is no cheating. What do I mean by this? If X and Y both are in India, both are domestic. So I am not saying that in domestic transaction cheatings are not there. There is a cheating. But this chapter is not targeting domestic cheating. Cheating can be of many varieties. The focus of this topic is what? To slap the cheating of profit shifting. That's why I am hell-bent to prove that it has to be an international transaction. Then only there amounts to a profit shifting. So in short, see, if you think, what if it is not international, even if domestic transactions are there, there is a cheating? Yes. Even if X and Y both are in, India, they can do something or the other. But that cheating cannot be termed as profit shifting, right? And right now this topic is focusing on profit shifting. So profit shifting can happen only when there is an international transaction. So can you tell me the flow of the chapter further? How this chapter will move on ahead? This is the base of the chapter. Trust me, you know, I felt like giving the maximum in this because I only know on this example and this screen the whole chapter is built up. Now tell me logically what should be the next explanation? See, with this example, I created an equation. Now you have to understand the depth of the equation. In the sense, first you have to understand that, sir, you have been saying repeatedly that they should be associated. Associated means what? This is defined by section 92A. Section 92A defines what is associated enterprise. Okay, then I was repeatedly saying it has to be an international transaction only. Then only there is a threat of profit shifting to another country. So what is an international transaction? It is defined by 92B. Are you hearing this section? So one section is defining associated enterprise, that is 92A. And other section is defining international transaction, that is 92B. So check the section 92A and 92B. And let us assume if this combination is built. If this combination is built, what happens? Whenever these two conditions satisfy, what happens? We don't trust this price, right? We call this a cheating. So what do? We find out the arm's length price. But how to find arm's length price? There is a section for that, 92C. And you know, the issue of arm's length price is so detailed that not just one section 92C. Look at me. There is a big family. 92C, 92CA, CB, CC, CD, CE. All C's are revolving around ALP. So at this stage, the chapter will almost get over. Did you notice for arm's length price, the sections are, main section is 92C. But the section 92C has got an extended family by way of CA, CB, CC, CD, CE. All starts with C because it is extension of arm's length price only. So by so many sections, almost the chapter will be done. See, you can check the summary. I explained you the journey of from year to year. So in this journey, almost you can see the chapter is over. Yes, after that means this whole set of sections are, on what? On this equation only. So tell me the sections. For associated enterprise, the section is 92A. For international transaction, 92B. And whenever this combination is set, whenever these conditions satisfied, government has to ignore your price and find out arm's length price. But then how to find arm's length price? See, ALP is very critical. See, for simplicity, I had given a ready-made figure $6,000. And right now you might be wondering also, what is so critical and special in ALP? Sir has given 6,000, so we can find out. It's not that simple. The term arm's length price has got a long explanation with how many sections? 6. Main is 92C and then 5 more sections. CA, CB, CC, CD, CE. These are all dedicated to arm's length price. At one point you will feel the name of the chapter should have been arm's length price only. Every lecture sir keeps talking about ALP, so much of ALP. It will be too much of ALP. So you will feel the why is not the chapter called as ALP only? Because there is so much to discuss. Though so many sections I said. And then after this 92C family, there are other sections which will see what is it. Right now let's not go into this. But broadly you can feel the whole chapter is revolving around this equation only. And this equation I have developed with the help of an example. Okay, now see here. Why this chapter is called as transfer pricing? Can you see some transfer here? When X Limited is selling the goods to Y Limited, it is kind of a transfer. And the manipulation is in the transfer price only. That is why transfer pricing. See, when X and Y are transacting, one way you can say, right, that X has sold the goods means it has transferred. and the transfer has taken place at 4,000, means that transfer has a price, and the whole cheating is on this only. That is why the chapter is named as transfer pricing. So the transfer price is a cheated price and the true price is arm's length price. So we have not named the chapter with the true price. The name of the chapter is with the false price, and the false price is the transfer price. That's why the name is transfer pricing. I am justifying the name. You should have felt there is some transfer from X to Y, and the price at which transfer takes place is the main manipulation for which the whole chapter is built up. That's why transfer pricing. Okay. So this was the introduction of the chapter. Now look at this. After introduction, see the summary. The next thing is what? Section 92A. As you have already explained the flow of the chapter with the help of this equation, same flow I have given in the form of summary. So first we have to understand what is associated enterprise as per section 92A. And you know why this definition is important? Because only if it is proved that between X and Y there is association, then only law can reject your price and take arm's length price as the base. So vice versa, if law is not able to prove that there is an association, they will have to accept my price as a genuine price. Then let it be very low. I got right to sell the price at lower price. For example, for my DT subject, I usually charge 15,000 for face-to-face batch. But if some student I have charged only 2,000, it's my choice. Can government blame you are cheating? I am not cheating. That student is not related to me. That student is not my relative. I want to provide my DT subject for 2,000 to some student. If I provide at lower price to some student, it's my choice. It's in general, if you sell something at a lower price, you cannot be blamed. Blame arises when the other party is associated. But then when it is said associated, that we need to learn. So for this, there is one keyword. There is one keyword. Can you see on the screen? The pronunciation of the keyword is sublug-gum-fo. How do you read this? Sublug-gum-fo. Sublug-gum-fo, sublug-gum-fo, sublug-gum-fo. So you have to repeatedly remember this. Sublug-gum-fo, sublug-gum-fo, sublug-gum-fo. Now in that, S stands for having at least 26% shares. Having at least 26% shares in another enterprise creates an association. Means you know what? Look, if X Limited has got 26% shares greater than equal to 26% shares of Y Limited, or it can be vice versa. If Y Limited has got greater than equal to 26% shares in X Limited, once 26% shareholdering seen between the two entity, that means there is something close between you. You are not two different entities. You look like two separately formed entity, but internally you are one and the same. Although by 26% it doesn't make much difference, but 26% relation at least gives you a power to control the other party and influence. See, although for holding subsidiary we say it should be more than 50%, but here we don't want to see the actual stake. We are interested in knowing that how much percentage will make you in a position where you can control someone. So even if I have 26% stake in someone, at least, although I have not got a big stake, but at least that 26% stake makes me capable to control and influence and to manipulate with the other entity. That position is achieved in 26%. So in short, what? Whenever between two entities you find that one entity has having 26% in another, 26% more, then it is an association. So what happens due to that? So once it is an association and it is an international transaction also, then your price will not be trusted. It will be rejected and arm's length price will be found. And whatever difference you have shown, it will be added to your income. But I just said one criteria. This way, there are many criterias for association. And out of this so many criterias, don't look at the notes now. Out of this so many criterias, even if one criteria is fulfilled, it is said that you are associated. Now tell me, in this 26%, if you have a doubt, that sir, who should have 26% and whom? Whether it is X should have or Y should have. See, the word associate means association between two people. So between means it is either X in Y or Y in X. Doesn't make any difference. So don't try to think that who should have 26 in whom. It can be anyway. Between two entities there is 26%. Whether X is having 26 or Y, doesn't make a difference. It creates an association. Then look here, look at this. If X, this is X and Y, if X is having 26 in Y or Y is having 26 in X, then it is association, right? Now, imagine between X and Y there is no shareholding relation. But in X, I am 26% shareholder, I. And in Y also, I am 26% shareholder. X and Y, I am the common controller. Who am I, Shirish Vyas? I am controlling X also. In the sense, I have got 26% stake in X. And in Y also, I have got 26% stake. So, although between X and Y, there is nothing. But they have a common father. Father means I am like a baap for them. I am controller of X. I am controller of Y. And when two entities have a common father, they are brothers. Brothers means what? Two person having common father. You didn't understand what I meant to say. X is controlled by me, means I am like a father. I am having 26% stake in X. Also I am having 26% stake in Y. So one way I can say, when I can control X, I can control Y. They both are my sons and they have a common father. And when two people have got common father, they indirectly become brother, and brother is also relation. So even X and Y will be called as associated. So tell me, in this example, I and X, we are associated. I and Y, we are also associated. Even X and Y will be treated as associated. So tell me, in this example, same example, X is controlled by me. Y is also controlled by me. And between X and Y, there is nothing. But still, whenever X and Y transact, it will be said as transaction between associated enterprise. And if it is an international transaction, then your price will be rejected and arm's length price will be taken as the base. I explained 2S. Can you see S2? What was first S? X in Y or Y in X. That was first point. Second was X is controlled by me, Y is controlled by me. I am a common controller, and when two people have got common controller, common father, they become brother. So that is second point. This way there are many points, but to be continued in the next lecture. We will stop the lecture right now only, means till till S2 we have done. This way there are many points. And see, one last thing, why it is called associated enterprise, It is not associated company. See, when we say company, it becomes a very narrow term. Company, joint stock company having share capital. The law has not said it is a company. It should be a company. It can be any entity. Enterprise means what? Tell me, then only I leave you. Enterprise means what? Any entity carrying on business. It can be a sole trader, partnership, firm, LLP, Hindu undivided family. Any entity who runs the business is called enterprise. Don't we say entrepreneur, Entrepreneurship means enterprising means business. So anyone who carries on business is enterprise. You know, if law would have said associated company, then what idea people would have got? Okay, the rule is for companies. Then what X and Y will do? Both will form separate partnership firms. Then they will manipulate. So they will get good ideas. That's why the law says that the rule is not just for companies, it is for any entity. Yes, the point which I was stating right now, that shareholding point will suit only in companies. But who said there is only one criteria for association? See there are so many criterias. Yes, the criteria of shareholding suits only in a company kind of entity. But there are other criteria also. So in short, keep your mind open and study the topic. The topic is not just for companies. It is for partnership, firm, sole trader, any entity who carries on the business. So this is still going on, to be continued in next lecture, okay? Revise and come, please revise and come, please come. Please come on time. Please don't ignore me.